Aloha, hey, it's Julie Zemelis, and I am here with Marla and Scott Wynn from the Wynn and Eagan Team. And today we're going to be talking to you guys about mortgages and strategies in the hot market. So I'm going to be asking these guys some questions, and we encourage you to also ask questions, and we will answer them. We have our wonderful Eric Zemelis doing the background work. So let's get started. Let's talk about the market, what's happening right now. Do you think rates right now are driving this hot market?
I don't think so.
Okay.
I think that really rates have been low for quite some time. Certainly we have seen some very historically low rates over the last year, but I really don't think that that's what's really been driving the market and how hot it is right now.
Okay.
I think what has driven the market is COVID and the fact that you can work remotely easier now than ever before, and which is opening up the eyes of people that they can relocate somewhere they'd like to be rather than where they were stuck, I guess.
Right. In fact, some of you who might be watching, I've actually talked to 3 or 4 people this week alone who are deciding to come to Hawaii because they have these newfound, I can work from anywhere for as long as I want, right? Mm-hmm. So in that, so COVID's driving the market and the remote worker aspect is driving the market. Are people able to actually get a mortgage if they have remote work experiences when they're even working in a different state?
Yes, absolutely. The only requirement that we have is that we have something from the employer that states that they are able to work remotely. Mm-hmm. So as long as there's nothing specific that requires them there to be in person, then yes, working remotely is totally fine as long as we have a employer stating so, and then we can put that in the underwriting file and utilize that to show that they can occupy primary residence here.
Awesome. Then let's talk about what's going on with the market in terms of everybody seems to have cash, and the cash seems to be driving the market. I put out today that cash is king, the queen, the joker, and the entire pack of cards.
Yes.
So how would you guys suggest competing in an all-cash market?
Well, I think the best way to compete with cash is to be a cash buyer. Right?
Have more cash.
Yeah, absolutely, right? But obviously, we're asking that question to people that are probably looking for a way to finance a property rather than paying cash, right? Mm-hmm. Which is why that question comes up. For those that are financing properties, though, there are ways to go about becoming a cash buyer, and I think that would be the best way to compete, if at all possible. Mm-hmm. So some of the strategies that you can do that, first would be a bridge loan. So just to explain what a bridge loan is, a bridge loan basically is the gap between your current home that you're planning to sell and the home that you're going to buy. Mm-hmm. And so with
You've got a cat.
They just climbed the screen all the way to the top. It was fascinating.
Okay, sorry. Bridge loan.
So bridge loans, yes. So bridge loans bridge the gap, right? So if you're looking to sell your current home and relocate and purchase a new primary, then the bridge loan basically is a loan on your current home that allows you to take the cash that you can then use to buy the next home, either as a full cash or as a down payment. Mm-hmm. And then once you purchase the next home here in Hawaii, then you would sell your current home and pay off the bridge loan along with any other financing you have on that property. So that's one way to become a cash buyer, if you will, even if you're not in a cash position, basically utilizing the equity in your current home.
And you would not have already had to sell your house on the mainland.
Correct.
Because there's a variety of people also who have been contacting us saying they're kind of worried about selling their house on the mainland because then it puts them in that free-floating position of trying
homeless?
to... Homeless? That was the word. Free-floating homelessness.
Yes.
And then coming over here and trying to find a rental, which is so hard right now. Yeah. And so this is a nice way to be able to stay homebound, but then maybe come over here and get a chance like rent an Airbnb and then look for housing, make an offer with basically cash, and then once you're in escrow, then you can go home and start getting ready to sell your house. Right?
But some people aren't necessarily looking to sell their home.
Right.
They're looking to buy a second home or an investment property, something like that, but they don't necessarily have the cash to do so.
Right.
And that's where the next strategy comes in, which is to get a home equity line.
Mm-hmm.
So a home equity line of credit is basically like a credit card on your home that you own currently. So if you've got a large amount of equity, you can get a home equity line of credit. Mm-hmm. You can then tap into the equity, pull that, have the cash readily available, use that cash to then purchase a home here, and then just repay the loan on your current home through that home equity line. So that's a good way to go about doing that if you're not planning to sell your current home.
Word of caution. Sorry, I just want to interject because we do have a customer that did this, and they did not initiate the refinance on their current home until they were under contract here.
Yeah.
And then turn times on appraisals and underwriting and processing and everything on their refi took longer than expected, and so it kind of made things challenging here and a little more stressful.
Mm-hmm.
So if this is a strategy that you are thinking about doing, get that cash out refi first.
There you go. Yeah.
So she's
or get
mentioned-
it. Or get it. Yeah. Okay. So there's a trade cash out refi and getting a HELOC.
Right.
Different.
Okay.
Yeah.
Yes, but either way, you have
Either
to
way.
actually ask the bank to give you enough money to be able to pull it out, right?
Right.
Because another thing too, that with rising home values right now across the country, a lot of people have equity in their house right now, right?
Mm-hmm.
But do you have to, when you go to the bank to say my house is now worth $100,000 more than it was a year ago? Do they have to send an appraiser out?
Yeah.
Is that what happens?
In some
Okay.
cases,
most
yes. So when you're looking at a cash out refinance as an example, it's all based off of risk. So when a lender collects all the information on you as a borrower and on you for your property, they run it through an automated underwriting system.
Mm-hmm.
And part of that underwriting process is to determine how risky of a loan they're going to be lending. The lower the risk,
Yeah.
the less documentation that's required, and in some cases you can get an appraisal waiver where you don't even have to get an appraisal as long as you have enough equity.
We got the kitty and the equity question coming at the same time. Eric, can you excuse us for just a moment? So, with that, you get all that done before you actually get in the car with a realtor and start looking at housing. Is that how that's supposed to
Right,
go?
because you're
Yeah.
trying to compete with cash, right?
Right.
So in order to compete with cash, you have to be a cash buyer. You have to have the cash on hand ready to go.
Okay,
Which-
so speaking of that, when you
Yes.
say cash on hand ready to go, let's say like today, you go and find a house and they say your offer is accepted. We need your earnest money right now, today. You can't just get a bunch of money unless you either bring cash with you or have a bank account here. Or how does that work when all of a sudden you have to come up with thousands of dollars of earnest money and you're here on vacation and your house is back and your bank account is back?
You can
on the
just
mainland?
initiate a wire from your bank on the mainland.
Okay, so that's just to get a wire transfer.
Yep.
Okay. Okay. Thank you.
Yeah. I mean, you have to be careful with wire transfers. I mean, there's a lot of wire transfer fraud and all that sort of stuff. So you want to make sure you have very clear wire transfer instructions from the title company that's going to be accepting the earnest money and so on, so that you're transferring to the right account and all of that. But yeah, you can certainly initiate a wire transfer while you're here from a bank on the mainland.
Okay. So that means at least you guys, if you see something, jump on it, because that's what's happening in this market right now. If you see something, you have to be aggressive and you have to jump on it. And it's nice to know you've got money, you've got everything behind you, so you can like at least know clearly when you write that offer that you actually have all this going for you in the background, right?
Yeah, I don't know if you guys covered this last week with Lance either, but realtors really are not putting people in the car until they are at least pre-qualified, but
Pre-approved.
hopefully pre-approved,
Yeah.
right? Because listing agents aren't accepting offers or entertaining offers from buyers that aren't pre-approved. So it really is in your best interest to get all your ducks in a row before you get here, because also it reduces stress. You know, even if somebody were going to accept, then you're under all this stress to get all those things done. It's just way better just to enjoy packing, moving, the excitement of buying the
that's fun,
house,
too.
and get all that stuff out of my. I was excited.
2 minutes on what the difference is.
Oh, to improve approval and pre-qualification?
Yeah.
Yeah. Give us another guy, yeah.
Sure. So pre-qualification, basically, in my definition, is just getting a completed application, which we either do online or we could do it over the phone. We run credit and we run automated underwriting. Once we have those three key pieces of information, then we can issue what's called a pre-qualification. Pre-approval takes it
But
one
before
step.
you jump into pre-approval, I just want
Go ahead.
to interject and say that different lenders will define these things differently,
Yeah.
right? So in many cases, a lender might call a pre-qualification a 15-minute phone conversation with somebody, and they say, what's your income and what's your credit score, and they don't even have a
Online
completed
lenders are
application.
great at
They don't
that.
even have a credit report run. It's just basically
What you
taking
tell them?
everybody's word for it as far as
yeah.
what would be pre-qualified, right? So
Okay.
Yeah. So then, like I said, our definition of pre-qualification is doing at least those minimum steps.
Running credit scores, the whole thing. So you actually have something
Automated
in a piece of
underwriting,
paper, right?
And then beyond that, we'll get documentation to verify everything in the application. Once we have all the documentation, then we consider them pre-approved.
Okay. And pre-approval, because I remember Eric and I've had to do this one, is getting all your paycheck stubs, getting all your tax returns. It's a lot of gathering of paperwork, right?
It can be. It depends on automated underwriting and what automated underwriting dictates that we have to collect, again, based on risk. But again, this is another reason why I suggest people do this step before they come to Hawaii, because when you're home on the mainland or wherever you are, you have access to all your stuff.
Right.
Once you get here, you don't have access to all that stuff necessarily, so it makes it that much more challenging and stressful, and just get it done before you come.
Right, and also a lot of you guys might be doing your taxes right now, so you're going to have all that information anyway, right?
True.
So,
Yeah.
Eric has a
Okay, can we break into a couple of well, yes, because that's what it is. First of all, we've got a couple of Aloha from Oklahoma, says Lori, of course, and then we've got Barbara says yes, Kitty, of course, and then Barbara says, are people buying land cash, or is it a construction loan possible in this market?
Both. I mean, people are buying land cash, but you can get construction loans to purchase here. A couple of the local banks offer good construction loans. The challenge I've seen with construction is just the build time is so long. But I think with a limited market, a limited inventory in our market, it's a good solution for a lot of people.
Yeah, we're seeing actually, if you guys were watching the market report, land sales jumped over 200% in the last 3 months. So people are saying, you know what, I can't seem to find a house to buy, so I'm just going to go ahead and build one. Which then, because so many people are doing that, there is going to be a constricture as people try and get architects and construction help and also the building materials.
Permits.
So, right, permits.
Yeah.
So just know that, and Eric and I were joking, that everyone who flies over here thinks they're the only one. And there's hundreds of people right now looking to buy housing and land, and the thing is that the system is starting to get backed up. Even the shipping, getting the wood over here for building new materials is just
And
crazy.
Barbara's question was exactly that, how long is build time?
Well, and that's just it. We don't even know yet, right? I mean, the more it's almost like when the mortgage market was going nuts. It's like when you start backing up. It just if it gives you any idea of a clue here, we talked to a furniture woman here, and she said that people are coming in saying, "I'm here, I want to outfit my new home. Where's my furniture?" And she said, "Well, at this point right now, we're running 5 to 6 months."
Oh, well, we
get
ordered
furniture.
furniture in early October, and we still don't have it.
Whoa.
Yes.
And that was in
So-
October, so that's even before it got so crazy as it does
Yeah.
here.
So just saying, you develop a strong sense of patience if you move here, or
That's for sure.
Well, and that's just it, though. I was telling people that you can't just building material, that you might want to think about buying what's already on the island, right?
Yeah.
Than trying to figure out how you're going to get your custom-made couch.
For sure.
But we don't have a lot of lumber for building on the island already. So, but that's another thing, too, that just when you're thinking about getting a loan and how long it's going to take for you can actually get to the point where you're shovel-ready and the framing starts, it could be a lot longer than it was even this time last year.
yeah, true.
Okay, so she's got one more question on this. Thank you. Don't construction loans require it to be built in a certain amount of time?
Yes, the terms of the construction loan do always have an end date. Most construction loans offer extensions for an additional cost. So that's one of the reasons, like, our construction loan is not great here, because ours are 6 and 9 month build times, and you can extend to 12, but it's a little costly. And I think a couple of the banks here offer longer build times initially with extensions.
There you go.
But another option would be to consider trying to find a land loan itself, rather than a construction loan where you're actually going to build on it right away. If you're planning to just buy the land and then construct down the road, then you might just look at trying to find a land loan.
You guys do land loans?
You know.
We don't.
Okay, so like local banks would do that?
Correct.
Bank of
Generally.
Hawaii.
And then typically, if they're going to go get a construction loan later, they can roll. The construction loan will roll in that other loan, pay that loan off, and it'll all be one loan. Then
Then
You won't have
that
two
becomes
separate
your mortgage
loans.
for the entire house once it's built.
Well, it becomes your typically. So there's two types of construction loans. There's a one-time close and a two-time close. If you get a one-time close construction loan, that's your financing forever. If you get a two-time close, which is more common, then you'll close at the end of the build time. Once you have a certificate of occupancy, you'll transition into permanent financing.
Oh,
So it's 2 loans.
there we go.
Yeah.
Okay. Question?
No questions.
Okay. So, we were going to talk about that, about bridging the gap of the sellers buying your home. Okay, we got the strategy of buying second homes and retirements. We've
One thing
got.
I wanted to make sure that I covered as well, related to the topic of how do you compete with cash, right?
Yeah.
Is sometimes it's a matter of wanting to do financing because rates are so low,
That's
right? And you don't want to tie up your cash when rates are as low as they are and the cost of borrowing money is as low as it is the strategy of buying a home cash, but then being able to do a cash out refinance to free that cash back up. with low interest rates. And that is possible. The only requirement that we have in order to do something like that is that once you purchase the home, you have to wait 6 months.
6 months.
So once you're in the property for 6 months and you've been the owner for 6 months, you can then do a cash out refinance and pull that money back out. Generally up to around 80% of the value of the home.
Really?
Yep.
Wow. So that might work for people who are trying to figure out ways to buy housing that might need some work.
Yep.
And so that way they'll wait 6 months, and if they pull some of the money back out, they can use that money for renovations.
Yeah, they could
Yeah.
do that actually.
Yeah. Okay.
If they buy cash,
Right.
like a fixer-upper.
A picture for a lot of people. And just so you guys know, I want let's just stop trying to find foreclosures in this market.
Yeah.
It's just not
Or
going to happen.
super distressed, really good deals.
Yeah, those
Yeah.
really good deals. Those if there's a cash buyer who is an investor with more money than you, that's happening right now. So, also in this market, I think that we're also seeing that people are coming and they're being surprised by how fast the market is actually moving upward. So when you come and you're pre-approved, right? And let's say you were pre-approved for $650,000, and then you notice everything seems to be going for $800,000.
Well, we pre-approve to a payment,
Okay.
not to a purchase price,
Oh.
because there are so many things that factor into that payment, like taxes, insurance, HOA, principal, and the interest. So we always give you a number, like you're pre-approved for this payment, which should be around $650,000. But if any of those variables change, then that can change.
But the recommendation we have is when you get pre-approved to your max. The max you could possibly go to. Not that you have to go that high. It's like a credit limit on a credit card, right? It's not like once you have a credit card with a high credit limit, you have to go out and max it out all of a sudden, right?
Yeah.
It's just there in case you need it.
Okay.
Well, the same thing is true with a pre-approval.
Okay.
Don't go out shopping with a $650,000 pre-approval, again, knowing that we're basing it off of payments. Go out and get a pre-approval for the absolute max you can go to, and then if you don't use it, great. But at least then you're ready to go, and you don't have to go back to the lender and say, okay, I need to increase my pre-approval now, because now I found a property, and then that one doesn't end up working out, and then you find another one even higher, and you're having to do the process over again.
Okay.
It just slows the process down. So instead, as long as you get pre-approved to the maximum, you're set to go from the get-go.
There you go.
Okay, a couple more comments is what we got. Renee says, aloha, looking forward to working with you, Scott, is what she says.
Is that Renee Tanya?
Yes. And then I've got JJ says, can you cash out refinance on a non-owner occupied condo?
Speaking from the person who just bought a condo, who doesn't live here. Does that work?
It is possible. So again, it comes down to everything related to lending is risk-based, right? So what you mentioned there was a variety of layers of risk. So one being a non-owner occupied property. That's the highest risk occupancy type between primary, second home, and non-owner occupied. And then condo is also the highest risk property type. And so the answer is yes, you can get a cash out refinance. But again, if you look at refinancing is a higher risk than a purchase, and a cash out refinance is a higher risk than a rate and term refinance.
And then throw that on a volcanic island next to the ocean with
Right.
tsunamis, and boom!
So it is possible. However, you're going to pay for it, if you will, either through lower loan to value limits, meaning you can't get as much cash out, or through higher interest rates, or a combination of the two. So it is possible. It's just not going to be.
It might cost you a little bit more.
Right.
Yeah. They decide if you want to do that or not.
Yes, exactly.
Yes. Okay. And then
Nope, no more questions.
that's it? Okay. How are we doing?
Oh, you guys go keep on going.
Okay. So okay, so this is where we were thinking about, taking the questions and the comments from the group here. But are you guys seeing also other trends in the market that you think that are important for these guys to know?
I mean, the biggest trends that we're seeing right now are rates are going to likely go up.
Okay, well, they're already going up, right?
They are already going up, right? I mean, we've seen that the national average has started increasing up over 3%. I think this last Thursday we hit 3.03%, something like that.
Which is the highest it's been since?
Oh, I don't know.
Probably June, because
For 6 months? Like 6, 7, 8 months?
It's been quite a while. So,
Okay.
so I mean, we're starting to see rates increase, and we're expected, if you look at all the different entities that forecast interest rates, we're talking about like the National Association of Realtors, the Mortgage Bankers Association, all these large entities that look at all the economics associated with what's going to happen with interest rates. What they anticipate is that by the end of 2021, we're going to be sitting at around 3.18%. So we're
still
not
doing
that
good.
far
Yeah,
away,
okay.
but yet we're still a little bit lower than that.
Okay.
And it doesn't sound like a big deal going from 3 to 3.18%, but when you compound that with the fact that most likely home prices are also going up, and that they expect about a 6% increase in home prices nationwide, and again, these are nationwide averages, not necessarily Hawaii specific, but 6% increase in home prices and a 0.2% increase in interest rates, that really starts to make a really big impact.
Okay.
Especially as we look at higher price points, right?
Okay, so that's what I was going to talk to you about. Because if you can do the math for us, because he's a whiz. If the interest rates go up 0.25%, let's just say, and you just buy you want to buy an $800,000 house. Just I'm throwing this whole math at you at
Sure.
this second here.
I won't be able to do it. I have a little calculator at my desk, but it makes me seem like a whiz. Not actually that good.
Stump Scott Wynn. So, but it could go up like hundreds of dollars, like $300 or $400 a month, if you just have just a quarter of a rate going up a little bit.
So I did some calculations for a previous YouTube video that I did.
Okay.
And for a $350,000 home price, with interest rates going up from 2.97 to 3.18%, and the price is going up 6%. What's the difference between buying now and waiting a year from now with those higher prices, with higher interest rates, on a $350,000 price with 10% down? With that situation, it's an extra $113 per month more in a monthly payment.
Okay.
But if you look at Hawaii, you're probably looking closer to about a $700,000 price point rather than a $350,000.
And you're looking at probably
price
like
point.
a 12% increase in home prices, not 6.
Exactly. So at that point, you're probably talking about closer to $250 to $300 per month increase in monthly payment between now and what we might see by the end of the year.
But even bigger than that, like I think about how it impacts your ability to buy, because we approve to a payment. So if you're going to eat up $350 worth of your buying power just because of increased rate and a cost of rate and increased home price, then you're really reducing the house you can buy.
Right.
By about $70,000 or so based on that particular example.
That much.
So with homes increasing in price, and then you get your top cut, then you're even more challenged.
I'd like to believe that housing prices can only go so high. Wouldn't that be nice to believe that?
Well, it's whatever the market will bear.
Yes, and there is a heck of a lot of demand trying to get here. And then when you guys are talking that way, and if a bunch of people are out there talking to smart people like you guys, and they start saying, I've got to get into the market now, that might also talk about the frenzy that we seem to be seeing and people throwing money at real estate right now because they know that whatever they get now, even though it seems a little bit above asking now, is going to pay off in the future, right?
It will.
Yeah.
And that's the challenge, and that's exactly why we're in the market that we're in right now.
Yeah.
So.
In fact, we saw a recent listing. Somebody thought they were going to go in for a little under the asking, and then they were surprised when the realtor didn't come back and counter them because there'd already been 5 offers, and they said, "Well," and then the realtor said, "I asked you to give me your best and highest price, highest and best." So they said, "Well, we thought you guys were going to counter us." It's like, no, we can't go then and re-counter 5 other offers.
Yeah.
And so they lost out for $5,000.
Wow.
And so that's what's happening now too, is that people are trying to say, well, it's almost like chicken, like financial chicken in this market right now, of saying, well, maybe if we just get a little under asking. Well, when you have all these people who are like this, playing that game doesn't work, right? And if you have this extra money that you have from a mortgage, what's $5,000, right? So
I think the best question, if I were in a buyer's shoes right now, to ask would be, how high do I feel comfortable going? And if you only feel comfortable going to a certain dollar amount on a certain property, then just feel comfortable that that's all you're willing to do and that's all you can do, and be okay if you don't get it.
Yeah.
But if you're holding back, even though you would go higher in this market,
that's what they did. They held back because they could have gone higher, but they were looking for a deal.
If you can and you're willing to, and they ask for highest and best, I would just bring your highest and best.
Yeah.
That's a good example.
Yeah. So, we got any questions? Nope. But that's strategy. So one of the things too, that if you guys want to ask some more questions, either in our Facebook group or on YouTube, we are monitoring these comments, and that way you guys can get a little bit more information if you're not able to be with us live. And unless there's more questions, I want to do a little promo. Okay, so one of the things that we're doing for our monthly real estate market update and our mortgage market update is we are giving away a $50 gift card to Magic's Grill for the people who are part of our Ohana group. So if you are on this live call right now and you're part of the 365 Ohana group, say, I'm here, and we're going to write your name down real quick, and then we're going to let these guys pick a winner, and then you're going to get a chance to have an oceanside dining and drinking experience at our local Magic's Grill.
Okay, well, that's going on. Barbara has another question. She says, "Are there any deals out there right now?" And she says, "Just
Define
curious."
deals.
Yeah. Well, you
The
gotta
ability to live in Hawaii is a deal.
There you go.
There you go.
But other than that, probably not. Probably
No.
not too many.
Yeah, it's also just because the amount of people trying to get here is so unprecedented, you would say, that anything that looks like a deal is going to be bid up, right?
Yeah.
Yeah. So, okay, let's hear it. Who is a member?
Okay, so we've got. Okay, it's going here. We've got. Let's see. We've got JJ, Morgan.
Okay, so Morgan. Is Morgan in on there? Or
Yeah,
Morgan
she's.
Ins?
Yeah. She's got Jenna.
Is it Gina?
Gina.
What's your last name? Sikta?
Yes. Yeah.
Yeah, right? S? Yeah.
Yes.
Gina was on the other call on last week, and we said, try again, Gina.
And
Okay.
Dave is here.
Dave.
Bucknell.
Oh,
Okay, and Renee says she's here, and Barbara. But no. Barbara says no deals anywhere. Huh? Sorry, that was something different.
so what's Barbara's last name?
Fry, and then we've got Rochelle, and we've got
And they're all raising their hands, but they're part
Yeah.
of 365 Ohana.
those are Paul K is here.
Oh, Paul K.
Okay, and then we got a question in the middle of these. Is what's the typical down payment is different between a house or land? The difference between a down payment on a house or land.
That's a good question. I don't finance land, so I don't know.
I would guess that land is going to require probably at least 20%, probably a 30% down payment, whereas on a house you can get in with as little as zero down depending upon the type of financing you're looking at. But generally, minimum down on a conventional loan is going to be about 5% for a home versus probably 30% for land. But also on land, it's a much lower price point, right, than
Yeah.
a home that's built. So
Right.
from a dollar perspective, it's probably going to be semi-comparable or maybe even a little bit less on land because land's so much less cost.
There you go. But not to build on it. So,
Okay, so those are the ones.
Was JJ one of the ones that was part of the 365 home?
JJ, yeah, I think she's
Okay.
she's one of her. Okay, so
making sure we have
so what I'm gonna do is what we did last time is I'm going to take Scott's little finger here, and he's gonna close his eyes, and I'm gonna run it up and down here, and he's gonna pick somebody. Ready?
All right.
Ready? And stop where you feel comfortable.
Right there.
And that would be Renee. So Renee, you are the winner of $50 gift card. Woo! So I just need to make sure that we get together so I can send that to you.
That was so techy.
That was
I know,
techy.
right?
Techy.
Very high tech.
Lots of fun and games here at the old Zameless Homestead tonight. So, also, we've got another treat for all of you people who just love to watch us talk live, is that we are rolling out a new gig. It is called Third Thursday at 3. And starting next week, we are going to bring opportunities to you guys through Zoom. So it's going to be Marla and Scott and myself and Lance Owens and Delania. And we're going to basically bring a hot topic of what's happening in the market on both the real estate and the loan side so that we can all talk about it together. And then you guys can watch. We're going to talk about it, and then the people on the Zoom call are going to be able to pop in with questions and be part of the conversation. So we're going to start that next week. And Scott has this like really great like little promo experience that he wants to talk to you about that.
Yes, right.
Totally did it.
So tell us about, give us like, he's really good at this. So we're going to do the Zoom link. You're going to, if you're on YouTube, you're going to join the 365 Ohana from going to move to Hawaii365.com.
Look at this. You're getting it all taken care of. You
Okay.
don't have to-
Looking at you. So help me with what I might be missing.
Well, the third Thursday at 3 is exclusively for 365 Ohana members.
That's
right?
okay, exclusive.
So that's where we release the Zoom link, which is going to be within inside that group. And so I guess the point is that if you're interested in that particular information and that particular opportunity, to make sure you're a member of 365 Ohana so that way you can access the Zoom link and be a part of the Zoom call. So I'm sure she'll put the link to the 365 Ohana and to learn more and become a member.
Link,
We're gonna let them
below.
talk.
There we go.
We're gonna let them talk for once.
Yeah.
Let who talk?
Well, they're gonna get to talk on
Oh yeah,
Zoom.
Right.
and we're
Yeah.
gonna see your faces,
Yes.
which will be even more fun. And again, if you guys are afraid of Zoom, you don't have to have the camera on. Don't let this scare you. But we will be able to just have a little bit more of an intimate conversation with you, which I think is a nice way to give you guys more value in what we're offering.
Yeah. For sure.
So JJ says, congratulations, Renee. Renee says, oh my, thank you. Renee says, very cool, thank you again and again. And Janet says, way to go, Renee. Congrats.
Good. Okay. So we're going to wrap it up, and you guys know that next week, if you guys want to be part of it, to make sure that you keep an eye open for that, and I'll promote it one more time in the group. And also know that on the first Thursdays of the month, we do the real estate report, and then the second Thursdays, we do the mortgage market report. So if you have any further questions, leave them in the comments below, and we are signing out.
Aloha.
Aloha.